Hi, and welcome to the Yes Option Weekly Analysis. My name is Cassandra Noy, and here's the latest for Sunday, the 11th of May. It was a mixed week for traders, with investors having to focus on escalating tensions in Ukraine and the threat of sanctions on Russia from Western leaders. Also, there were closely followed speeches from the ECB President Mario Draghi and Fed Chair Janet Yellen, which ensured volatility and volume levels increased as the week progressed. Before the ECB press conference, the euro-dollar hit a 2.5-year high. However, once Draghi implied that he will take action to weaken the euro as early as next month, the euro-dollar fell the most in 7 weeks. Strong data from the UK saw cable hit a 4.5-year high, while the dollar-yen experienced quiet trade all week, unable to break the 101 support level, which has held pretty firm for the last 3 months. Stocks were mixed to lower for the week, with U.S. stocks down, led by Twitter, which lost a quarter of its value as the share lockup expired 6 months after the firm's initial public offering. Events in the Ukraine dictated Euro stocks, which ended lower for the week after fighting intensified, and Germany and France threatened further sanctions. Apple shares dropped 0.6% on Friday after reportedly negotiating a buyout of Beats for $3.2 billion. The move was considered out of character for Apple, and as such, investors reacted negatively. Towards the end of the week, the near civil war in Ukraine spooked investors seeking refuge in the safe haven appeal of gold. However, earlier profit-taking meant that gold was 1.2% lower for the week overall. Crude oil ended the week 0.2% higher despite rising U.S. supply levels as concerns continued over Russia, the world's largest oil producer and second largest exporter after Saudi Arabia. Increased supply levels in the U.S. and warmer weather forecasts meant 3 consecutive session declines for natural gas, which received a boost in the previous week on an unseasonal cold snap in North America, which raised demand levels. So what's in store for the week ahead? The increase in currency volatility seen in the past week should continue into the coming week. We expect the euro to drop lower against the dollar, especially on Tuesday when German investor confidence will be released, showing a downside. However, Thursday's Eurozone GDP data is expected to show a slight increase, which could stall declines in the single currency, making put options on the euro-dollar looking good until Thursday, when call options look like the investment to make. The Canadian dollar looks primed for declines this week, with manufacturing sales on Thursday set to show contraction, while expected positive data from the U.S., in particular Tuesday's retail sales figures, should boost the U.S. dollar against its Canadian cousin, making call options there a sound investment. Make sure to keep an eye on events in Ukraine as geopolitical tensions enhance gold's safe haven appeal, and after last week's decline, we expect call options in the precious metal to be profitable choices. Remember, at Yes Option, making call and put options can generate returns of up to 89% in as little as 60 seconds every trade. So start profiting today. That's all from me, Cassandra Noy. Be sure to tune in same time, same place for the latest Yes Option weekly analysis.